Welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. In this video, I want to talk about my favorite Canadian bank, TD Bank. It's the second biggest one in Canada by market capitalization, second behind Royal Bank, and in my opinion, it is the best mixture of growth, dividend, and value. I mean, most of the banks in Canada all exhibit those three characteristics. However, in my opinion, the best overall one is TD. And the reason why I want to bring up this particular stock at this time is because it's down about 7% from its all-time highs that it had just hit about a few months ago, as it had a crazy run-up over the first part of 2021, as it's just been on a run as the rest of the Canadian banks have been, but it has cooled off recently. I think it presents an opportunity to buy the dip on one of Canada's premier banks. Before we take a look at TD Bank and comparing it to the other big banks, if you haven't already, smash that like button, hit that subscribe button, and let's get started. Alright, starting off with market cap from smallest to biggest. Smallest being CIBC, CM stock, and it's up 36.47% year to date, which is actually pretty good. All the bank stocks have done really well this year to date, and looking at the market cap, it's 66 billion Canadian dollars at a dividend of 4%. So pretty high, and it has a forward PE ratio of 10.32, which is really cheap. So CM stock, which is CIBC. Next we have BMO stock, which is up 33.74% up to date, year to date, which is again really good, with a market cap of 83 billion Canadian dollars at a forward dividend and yield of 3.3%, and has a forward PE ratio of 10.3. Taking a look at the Bank of Nova Scotia, or Scotiabank, up 15.68% year to date, and has a market cap of 95 billion Canadian dollars at a forward dividend and yield of 4.63%. And taking a look at the forward PE ratio, it is 9.95, so very cheap. Next, TD Bank, and up 14.68%, so not as much as the other ones, and has a market cap of $150 billion with a forward dividend yield of 3.86%, and that forward PE ratio of 10.88. And lastly, we have the biggest bank in Canada, RBC, at $129 per share with a market cap of $184 billion, a forward dividend yield, of 3.36%, and a forward PE ratio of 11.61. So despite all the price appreciation that we've had in the banking sector in Canada this year, you can see that they're still priced pretty fairly. And again, they have that dividend, they have the value, and they have growth. All the banks in Canada are all fundamentally strong. So taking a look at TD Bank. So we see weakness, the top of the market from the end of May. It reached that top and then had a weakness afterward, and then gained some strength again at the end of August. And then we had that big red candle, and now we're trading right at that support line of the 80, 81, 82 dollar mark over here. So if this does fail, this area, we can fall all the way to maybe the $77 mark. Again, not necessarily. We could fall anywhere in between, maybe even crush that, but that's the next area of, interest that I'm looking at, because I'm looking over here back in March of this year where we reached a nice little, area with the buyers and the sellers for this week and a half. So it gives, it's not that long of an amount of time, but it's something, whereas you don't have that much in between $78 and $82. And just because this is TD stock, it is a premier name that you do want to take advantage when the stock is down. It was a difficult name to buy for the first half of the year as it was just going up. It hit the 20 EMA a few times, maybe in February and in April, and then afterwards in May once the trend turned. However, you didn't want to chase the stock either, because you never knew when it was just going to turn and go right back down again. So if you were waiting for weakness, I would have understood. Otherwise, that 20 EMA was a good buying price. But now that we're trading sideways, creating a base at this $80 mark a few times now, it gives investors a little bit of peace of mind knowing they're getting a decent entry point, at least from what the chart is saying. But again, anything can happen. But it is a point of interest compared to it being at least 7% down from its all-time highs. And if you're not comfortable just investing in one company, you can invest in the BMO Equal Weight Banks ETF, is ZEB.TO, and it has CIBC, Bank of Montreal, National Bank, RBC, TD Bank, and Bank of Nova Scotia, all equally weighted at about 16% each in this ETF. And looking at the chart, it actually looks a little bit similar to TD Bank. So they all trade the banks similarly. They all have similar characteristics as any sector or any stocks within a sector will all trade similarly, even though it's not the exact same. Otherwise, guys, it's just an opportunity to buy while things are lower and not just going straight up. As a long-term investment, you can't go wrong with the banks. They're all fundamentally really strong. And yeah, and when it comes to options or shares, they're all good. And yeah, we're gonna talk lots more about the stock market. So that's the end of my video. If you haven't already, please like the video, hit that subscribe button, and I will see you guys in the next one.